Hello there, this is fairbinaryoptions.com, and we are looking at the euro US dollar in this Saturday. As you can see, like the name of the recording suggests, we are considering a possible X wave to the upside. You have to remember that the next week is going to be Christmas. It is a Christmas week, and we'll have one day off on the currency markets, and therefore if you trade binary options and use the assets as the currency pairs, you should consider that on one day is going to be, the markets are going to be closed. But anyways, heading into next week, I still consider this to be an elongated flat. Elongated flat means a part of a leg of a triangle or the entire leg of a triangle. This elongated flat started from the top left here and to the downside, and it should be labeled again something like this. This would be a wave A. Then of course a B wave to the upside, and then again a C wave to the downside. Now this C wave here that you can see is a falling wedge, in the sense that if you take a trend line from the lower degree 1 to 3 and 2 to 4 waves, something like this, you are seeing that the 2 to 4 trend line here has been broken this Friday, retested, and then price just broke to the upside. Now it is a classical technical pattern here. We had the US GDP. Actually, it has been a revision of the US GDP. The previous has been 2 point something, and the revision has been 4 point something. So way bigger, or revised way higher the US GDP. Normally, it should have been, let's say, positive for the US dollar, but the risk-on environment, or considering the previous FOMC meeting here, market, in my opinion, tried to book the profits for this sell-off. So to book the profits in front of holidays and in front of the weekend that it was coming. Now, if you look at the market, this is an A, B, C, and this is the elongated flat. So it started on the left side and ended on the right side, probably around here. So this is elongated flat, part of a contracting triangle, or the entire leg of a contracting triangle of a bigger degree. What next? Well, we are looking for an X wave out of this degree but this X wave can have any possible corrective wave shape. So it can be a zigzag, it can be a flat, it can be a contracting triangle, it can be an expanding triangle, it can be a double combination or a triple combination, anything. What we do have here of a lower degree, if you look at the price section from the lows, you have basically something like A, B, and C. If you take a Fibonacci retracement and you measure this retracement here, you see that it is going beyond 61.8. It implies that this is a flat. Well, if this is a flat and the price goes to the upside like this, also this one looks like an elongated flat, suggesting this is another leg of a contracting triangle. But anyways, it should be labeled of a lower degree as this being wave A, this being the B wave, and of course this being the C wave. How about next? Well, as you can see, price is making here some sort of a contracting triangle. So what I would do next, heading into next week, I will try to buy still put options, because this is a leg of a triangle. This is only the first part of the correction, ABC. We're looking for an X wave and then another ABC or a contracting triangle, but definitely these lows here will be broken. Now, probably they are not going to be broken in the Christmas week or in the New Year's, but these are going to be broken. So we are not interested into buying put options, but only into buying call options, but only into buying put options. So this is not a time and place to buy put options, because as you can see, price is making here some kind of a contracting triangle. So it might be ABC, then we have an X wave of a lower degree, something like this. And now from this moment on, heading into Christmas, to have another ABC or let's say 61.8 out of this move to the upside. So this would be the move to the upside. Let's make it of a different color, something like that. And if you clone it and put it here, let's say that the contracting triangle is going to break higher, I would say 37.20, something like that. I would be interested into selling the euro US dollar, or basically when you trade binary options like we do here, I would be interested into buying put options when price is reaching 137.20 this Christmas week. So this would be our strategy going into this Christmas week. We would like to sell the euro dollar or buy put options with expiration date end of week. So end of week markets are going to be open next week on Friday 21 GMT. We are looking to buying put options for end of week expiration date, basically on next Friday at 21 GMT. But these put options to be bought only when price reaches 1.3720. So regardless of the moment of time price is reaching 37.20, I'm talking about Monday, Tuesday or Thursday or Friday, you buy put options with end of week expiration dates, basically for Friday 21 GMT, and that should be our expiration date. Normally we are looking for a X wave of this degree and then for prices to go to the downside. It remains to be seen. Thank you very much for being here. This is fairbinaryoptions.com. All of our analysis and recommendations are possible due to the help of our sponsor, Lionel.